All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off, as always, with the S&P 500, making a new closing all-time high on the week and on the day. This past week here, as we're looking at the S&P ETF Spider, in the short term, it looks like we could trade up as high as the mid 440s. You see this upper range here of this little wedge pattern we've got here, going back to really October of last year, with the lower range being from the March lows. But it looks like now the markets could possibly test up into this upper range. You guys know I've been talking about a potential real blow off move. As far as the depth of what a correction could look like there, could it be 5%, 10%, 20%? It's really unclear at this point with the amount of liquidity in the system, but this market does look a little long in the tooth, as you guys know I've been talking about recently. Really the money flow, this is definitely a day trader's market right now. There's a lot of, it's pretty much every single day, the direction of the market is just tied to yields, and it's on a day-to-day basis. If you notice, really, obviously yields up big on Friday. They were a little oversold short term, but as soon as that happened, we had a rally in Dow stocks, and Dow has been under pressure for the last couple of weeks, and even right in here we had this dip in yields and Dow dipping and then pushing back up. Same thing with the Russell 2000. Russell's been a little bit softer, and as soon as yields got a pop, Russell gets a pop. So it's really on a day-to-day basis. It's very hard to trade this on a swing trading basis because it's just every day. It's yield dependent. Although the Nasdaq does seem to be in the beneficiary of the lower yields, as we know, but it is maintaining the most trend here. Although again, a little short-term overbought here. But this is a strong trend here. You notice cloud software. Look at the reversal back in May. Nice little pattern there, and a push higher. Same thing with the semiconductors. You got this reversal here and then the follow through there. And although semiconductors have not had as much of a strong rally as some of the other tech stocks, which definitely is a little bit of a concern to me because semiconductors are a leading indicator in the market. Also, another leading indicator. So if we look here at the Dow transports, we notice we've had pretty much a 10% correction really over the last month or so. And these tend to be leading indicators for the overall stock market, as I'll show you here. If we just take a look at the S&P 1 second. Yeah, so going back, you notice for instance, Dow Transport's peak here, and then you get a little bit of a fade, and then the market rolls over. Again, peaking here, market rolling over later. Again, peaking here, and then the market having this sort of small bear market in 2015. Again, later on, we see the peaks. Well, it's probably hard to see. Yeah, we see the peaks here, and we see the peaks here, and yet again here, previous to the March 2020 drop. So the Dow transports tend to be a leading indicator for the market. So that's just something to keep an eye on in the near term. It is a very good leading indicator, much like the semiconductors. Anyway, moving on to gold here. Gold having a nice little rebound. Again, it's got some work to do to get back above these moving averages, but if you can consolidate here sideways for maybe the next week or so, it's possible we could push higher, which would be very bullish. Again, we had we had a nice move here from March and April, and then you got, the trade got kind of crowded, in my opinion, and this flush out came during OPEX week. Remember that. So that was used to probably flush out a lot of call buying. The trade probably got short-term crowded, and we saw a nice pullback. And this was this was a lot of fear on the tape, and we had look at the size of these red bars down. So they were putting fear on the tape there and flushing out the weak hands, in my opinion. If gold can get back above these moving averages, we're absolutely back in business, and that will be extremely bullish in the short to medium term. But let's not get too excited yet. This chart's still pretty neutral. Again, these are pretty big sell candles. If we look at the weekly chart, we're still inside of this giant red bar. But if you can work your way back up, consolidate bullish, it's got a really good chance of attacking that previous high there of around, well, I'd say the breakdown area is about 1860. So that has a good chance of getting back up in that range. Silver as well. Again, so we have this kind of bearish inside bar here, but it's taking a really long time to play out. And whenever you take a long time to play out like this, a lot of the times it just won't happen. So maybe we could get a short breakdown here, a test candle of this trend line. And at that point, I'd probably would be a buyer of silver here as a swing long. But outside of that, again, the chart looks good, especially on the weekly time frame. Remember, I used the term coiling. This is what we like to see. It's coiling higher. So again, nothing really wrong with the chart here. The trend is up. I'm just going to sit on the sidelines here with silver for now and wait for it to tell us what to do. Crude oil had a nice correction this week, or I should say a pullback, but it has recovered nicely. The buy the dippers came in very quickly. I'm still looking for a little bit more downside on crude. It did hit my level perfectly. You guys know I've been talking about this for a while now. I've had this level on the chart pretty much showing you every week, this monthly pivot top, and we did hit that perfectly. I do think crude has a little bit more in the cards in terms of a pullback. The trade is just really crowded on the long side right now. So that's my concern really. And also, so remember last week we had the news from OPEC where essentially they kind of deferred their decision and they said, well, we're not going to really do anything right now. And that was bullish news for oil. And what happened? Oil gapped higher and then it reversed and sold off. That's usually a pretty bearish indicator in the short term. When you have good news for an asset and it sells off, that indicates that there's distribution and some profit taking going on. So just something to keep in mind, although oil did have a nice rebound by the end of the week. So again, short to medium term, I'm a little bearish to neutral on oil. Long term, still bullish energy. Let's take a look here at nat gas again. We'll just do a little quick update on nat gas. Again, same type of deal. Nice little bullish flag here, kind of building up. Again, I think it's going to have to do a lot more consolidating in order to attack those highs on the monthly time frame that we talked about here last week. But again, nothing wrong with the chart. As far as getting leverage to nat gas, it's very difficult because there's not too many pure nat gas plays, but Devon Energy is a nice company here. And I do like this chart a lot. The trend is up. You're above all four major moving averages, and really just kind of consolidating to attack these highs. I like that you've got a crossover here with the 50 and the 100, potential crossover with the 20 and 200. Now what you want to look for after the crossover, let me just tell you, the problem with crossovers, a lot of people buy the crossover. You don't want to buy the crossover. What you want to buy is the spacing. So when you see large spacing in between these moving averages, so that's how you know that a stock is in a stronger uptrend. Looking on the monthly chart, again, still in a bit of a downtrend here, but it is starting to reverse, and it is consolidating now to attack these highs here. So it's going to have a little bit of work to do, just like nat gas does, but if you're looking for a little bit of leverage, this is a nice name to play. And then finally we have, so we'll just take a look at copper here. So China is now, I'm sure you guys have heard, they're selling base metals. So if we take a look here, Jason pointed this out earlier this week. They're now becoming a seller of base metals here, which is pretty much unprecedented. Again, that could put pressure on copper. Now this chart pattern is a little bit neutral, so you have this down move here and then a kind of an inside bar here, but you also have short-term bullish consolidation. You see this move up and then sideways. So the bigger pattern is slightly bearish, but the micro pattern is slightly bullish. So until we get a break one way or the other, it's going to be hard to tell where it wants to go. I will say the thing to watch with copper is this 100 moving average. That's basically been your trend, so to say, for the last year or so. If we can break back below that, copper may go into a corrective mode. But if we stay above it, it is okay for the time being. That said, I don't think there's anything else I really wanted to cover. I guess we can just take a look at the VIX really quick. So the VIX, again, so we talked about the spiders possibly testing the mid 440s, and I've been talking about I want to see the VIX have one more flush lower. Been talking about that for a little bit of a while now, but I haven't really got it. I want to see bear capitulation before I really get excited on the short side for a potential correction. But VIX had a nice pop this week, and then came back in by Friday. We had the Friday effect happen again. One thing I do want to point out, I saw a lot of people on Twitter, they were like, oh, the VIX was up 18% on Thursday. And that just proves that there's a lot of hedging in this market and that it's not overcrowded to the long side. But that's not necessarily true, because we know that leveraged short vol is incredibly crowded. And the reason why you're seeing an 18% move in the VIX on Thursday with not even a 1% move down on the spiders is because the trade is so crowded. So once the short covering starts, it causes a massive spike. And that's why I believe as soon as we have a real correction, like even just a lousy 10% correction, you're going to see a massive move in volatility. So that's why I'm still in volatility here, and basically just hedging my position with longs in the short term, because the upside is just very, very attractive to me. So yeah, just wanted to give you a little update there on the VIX. Outside of that, I think I covered everything, but so you guys take care and have a great rest of your week, and I'll see you next week.